Talk about whiplash. The markets just gave us a tale of two completely different stories, all packed into 1 week. It started with an AI-fueled rocket ship blasting off to all-time highs, and then ended with a geopolitical shock that sent everything tumbling back down. So what on earth just happened? Let's break it all down.
I mean, really, this is the whole week in a nutshell. We kicked things off with this powerful, AI-driven momentum that was just pushing stocks to record after record. It felt unstoppable. But then, almost in the blink of an eye, everything changed. A sudden tariff threat created this abrupt U-turn that left a lot of traders scratching their heads. So what was really behind this wild ride?
Okay, to really get the shock of that downturn, you first have to appreciate just how incredible the rally was that set the stage. The week really did kick off with pure bullishness, and it was all being driven by what felt like the unstoppable force of artificial intelligence.
This number right here, this tells you everything you need to know about the mood. On Friday morning, the tech-heavy Nasdaq Composite hit a brand new all-time high. The feeling on Wall Street was absolutely electric. It truly felt like there was no ceiling.
And listen, this rally wasn't just built on pure hype. There were solid reasons for it. For one, a massive deal between OpenAI and AMD signaled that the AI spending frenzy is nowhere near over. Then, you add in the market's continued hope for interest rate cuts, which makes money cheaper for companies, and you have a really potent combination. The result of all this? The S&P 500 clocked its 32nd record close of the year. 32nd!
But of course, you know how it is. Even when the whole market seems to be surging, it's always a market of individual stocks. There are always these unique stories of success and, well, struggle playing out just beneath the surface.
And here you can see those little micro trends in action. You've got Applied Digital, a data center company right at the heart of the whole AI boom, just surging 30% on blowout revenue. But on the flip side, an iconic brand like Levi Strauss falls after cutting its guidance, which is basically telling investors to expect weaker results ahead. It's just a great reminder that even in a strong market, company-specific news is what really drives the action.
And that brings us to the moment it all pivoted. All that positive momentum, all those record highs, it all came to a sudden, screeching halt on Friday afternoon.
This right here was the catalyst. A single post on Truth Social from former President Donald Trump sent a jolt through trading desks everywhere. This threat of a massive increase in tariffs on Chinese goods, it just immediately wiped all that earlier optimism right off the table.
And this threat didn't just come out of nowhere. It was a direct response to China tightening its control over rare earth metals. You know, those critical components in basically everything, from our smartphones to advanced military tech. So this move instantly reignited fears of a much broader trade war.
And you can see the whiplash in the market right here. It was immediate. In the morning, the Nasdaq was green, just cruising toward another record close. But after that tariff threat, it didn't just give back its gains, it plunged 2%. A complete and violent reversal in just a matter of hours.
The fallout was everywhere, and it was fast. The S&P 500 snapped a 33-day streak of relative calm. And no surprise, tech stocks with heavy exposure to China got absolutely hammered. AMD, the hero from earlier in the week, fell over 5%. The pain was felt across the board, and it just shows you how sensitive the market still is to any hint of trade tensions. So, after a week that gave us both a brand new record high and a sharp, painful sell-off, the billion-dollar question is, what now? How do we navigate this new layer of uncertainty that just got dropped on us?
And here's the tricky part. This whole challenge is made even tougher by the ongoing government shutdown. That means we're not getting our usual flow of key economic data, like inflation reports. So traders are essentially flying blind on the macro front. Where can they even turn for a read on the economy's health?
Well, it turns out all eyes are turning to one place: bank earnings. Next week, the big players like Citigroup and JP Morgan are all set to report. And without that official government data, their reports become even more critical. They offer a real-time window into the health of consumers and business loan demand. Honestly, their outlooks could very well set the tone for the entire market.
And that leaves us with the ultimate question as we head into next week. We have two powerful opposing forces at play: the incredible fundamental momentum we're seeing in the tech sector and the completely unpredictable political threat of a trade war. It's a classic tug of war. Which one is going to have the upper hand? That's what every single investor is going to be watching.